Hello and a very good afternoon, everyone. This is Megha, your host, with my co-host Lalita, and we welcome you on the 8th of Investment Pathshala 2023. Today, our speaker will explain to us what investors look in the startup when they invest in. We have uh, we have our very excellent speaker with us, Mr. Shashank Randev, founder of VC 100x VC, India's first venture fund to invest in early stage startup using iSAFE. He brings entrepreneurial and investment understanding with 15 plus years of cross functional expertise. A very warm welcome to you, sir.
Thank you, Megha, and thank you, Lalita.
And it's a great pleasure to have you with us. Now, sir will explain in details about this topic. Now, sir, the stage is over to you.
Thank you so much for having me here. I always try and be present everywhere or anywhere where there's an opportunity to connect with founders and learn about their businesses as much as I can. And I think what is interesting is how the last year has panned out for all of us, and there are new opportunities emerging within the whole startup ecosystem. Each day, each and every day is turning out to be a unique opportunity for many founders. And I'm also seeing a lot of ideas coming from uh, tier 2 and tier 3, and I've always been wanting to visit Jabalpur. And this is my attempt to be associated virtually in some capacity with the whole ecosystem. So today I will discuss about what we look at when we are looking at companies. Just to give you all the audience members over here, I'm sure, are bright and sharp with the access to information across the web. Everybody knows what startups are, how startups are emerging. If they don't know, they can always log on to the website and learn about new things. So today I'll just go over a few set of pointers which we look at when we are investing in early stage companies, and how we've kind of evolved as a fund also. So 100x.vc is an early stage fund. We invest in early stage companies. We've already gone ahead and invested in a bunch of companies across sectors. We are a SEBI registered fund, and operate out of Bombay. And we are in the business of funding exceptional Indian founders because we truly understand that ideas are fragile and we like to nurture them at 100x.vc. A current set of performance, I think, has been that we've gone ahead, we invest in a set of companies at one go. So we started with a check size of 25 lakhs, and we've gone ahead and invested in 80 companies. In class 01 we invested in a set of 20, then class 02 we invested in a set of 9, so on and so forth. And hence we invested in a set of a group, large number of 80 companies over the last 3.5 years or 3 years. And then we went ahead and increased our check size. So currently we are investing 1.25 crores per company. And we've already gone ahead and invested in 25 companies in class 08, which we actually announcing next week on 21st January, and which will see participation by hundreds of investors, roughly around 350 plus to 400 investors in Bombay, hearing these companies. We are typically the first check in our portfolio companies, and I think what I like to convey to the audience members over here, that all the ones who are operating out of incubation centers or starting their first idea, feel free to log on to our website 100x.vc and understand how we operate. We are very friendly. We want to invest across the country, tier 1, tier 2, tier 3. If founders have a great idea, they've built the idea to some level, then and they have figured out that this can grow, there is a business model, then 100x is essentially your first partner. We will come in and we will give you the seed capital to kind of take the momentum ahead, so that you guys can continue with your journey and we can help you grow. But a few pointers which we like you to consider in mind when you're approaching a fund like ours also, or any other investor, is truly understand why investors exist in the first place. Just because भाई चाचा के ताऊ के लड़के ने स्टार्टअप स्टार्ट करा है, so you will start क्योंकि उसको फंडिंग मिल गई है. That's not the right approach, right? So you need to build that mindset in terms of where your company will go. I'm hearing a lot of echo, Lalita, so you might want to mute yourself over there.
Sure.
So, so founders are working on an idea which is not easy to explain, and they're unable to communicate. I think is the number one reason why companies do not get funded. Right? They fail to develop a convincing pitch narrative that will attract or persuade investors to fund the idea. They will pitch their technology, but not their business. Dhanda is what we call, right? A complex idea, though very useful, has no value to customers or investors if they can't understand it. अगर आप समझा ही नहीं पा रहे हो अपने बिजनेस को, तो you will not get funded, right? And when you're communicating, when you're building a business, your ability to communicate what your product is very important. Everything can be built, but it's not necessary to build everything. The biggest failure which happens with tech founders that they're unable to release the product as they're building grounds up, right? So your priorities end up in chaos. You end up wasting a lot of time, right? So don't build everything. Focus on one thing when you're starting out. Startup founders also, they hire people for their track record and not their potential, right? In the early stages, if you go to a person who's worked in the likes of large companies, and expect them to perform at your speed because you could be coding in at 12 a.m. in the night, right? So I think what you require is you need hunger in people, right? And that hunger can come in an intern also, or a 6 month employee also, right? So the mistake startup founders make is to hire people with credentials, expensive people, right? And they don't fit into the culture because they bring a baggage of entitlement, commitment. भाई हम तो 9 से 5 ही काम करते हैं, we work in a certain style and all that, right? So for early stage startup companies, every hire can make or break your future, right? So keep that in mind. Being successful in raising too much money early on, some founders end up raising some amount of money, right? So too much money is like having too much time. Founders lose the focus. They end up building a plan to spend but not to build a business, right? And too much capital at seed stage changes the team's mindset in unhelpful ways, right? So shortage of capital in every early stage startup forces you to make hard choices about what you will be building. So like my partner Sanjay Mehta always likes to quote, entrepreneurship mindset is like this: if you can place yourself on top of a mountain and somebody pushes you down and you're falling off the mountain, now either you will hit the ground and you will die, or if you can somehow build a plane while you're crashing down, right? That kind of mindset, right? That I'm going to build something, I can fly, I'll pull out my shirt and figure it out and then zoom out. That is the mindset you need to have when you're developing a company, right? Every day will be a problem, every day will be a challenging day, every day will be a day where you'll get up in the morning and you have to fight 10 things, right? But you get up in the morning and you're like, nahi boss, 10 चीजों को आज fight करना है. ये is a normal routine. That's the mindset you have. So raising money early on kind of will sometimes help. It kind of loosens your sharpness. You sometimes founders lose that sharpness, right? So when you raise your first money, be sure how you utilize it, because you raise that money, your growth, if you raise this much money, your growth has to be this much, right? um, and you have to be very cognizant, because then the follow-on investor will say कि boss पैसा raise करा है पर कुछ काम हुआ नहीं है. So you're automatically axing your feet. uh, Building a product that no one wants, I think this is a very important thing. You need to truly understand the need of your product, right? The big problem you're trying to solve and the audience for that big problem, right? The product you've built, so if it doesn't solve anybody's problem, then it will not be scalable, and most importantly, it won't be fundable, right? So make sure that your customer, user, buyer, client exists, and you know that this is my entire universe, and I know that these guys will buy it because this is a good product and there is a need for this product. uh, there is no respect for money, frugality, and budget, right? And this is one of the reasons why founders don't get funded, is because they don't look at managing finances. They'll spend recklessly. uh, नेटफ्लिक्स और अमेजोन पे दो तीन शोज देख लिए तो दे फील दैट यूएस के अंदर स्टार्टअप ऐसे बिहेव करता है तो इंडिया में भी ऐसे करना चाहिए, एंड दैट्स नॉट द केस बिकॉज वी आर इंडियंस, वी ऑल कम फ्रॉम मिडिल क्लास फैमिली बैकग्राउंड, एटलीस्ट आई डू. And we've as our dadis and nanis used to say जितनी चादर उतने पैर, right? But जब स्टार्टअप स्टार्ट करते हैं तो हम भूल जाते हैं because it's so cool, and that should not be the case. You shouldn't shy away from the fact that you are operating in India. तो क्या हुआ, हम उतना ही पैसा खर्च करेंगे जितनी जरूरत है, क्योंकि great businesses can be built with that mindset, and that is what the investors look for, right? So be accountable, and as they say, frugality is something founders need to practice a lot. This is also an interesting point where getting a large contract, a very big customer very early on, right? Founders need to understand how much time they want to dedicate to one customer or want to go after 10 small customers, because initial stages you need to validate the product, right? If it is being used by many people, this means uska utility hai, there is a need for that kind of product, right? एक ही कस्टमर यूज कर रहा है, बेशक वो आपको वो 1 लाख रुपए दे रहा है, उसका कोई महत्व नहीं है, उसका कोई पॉइंट नहीं है. But if it is being used by 10 customers, even if they're paying 500 rupees, I know 10 customers are using, मतलब 10 कंपनीज यूज कर रही हैं, 10 से 20 करेंगे, 20 से 40 करेंगे. One customer, because they're paying you so much, doesn't give you the utility of the product. And the investors, when they're looking at a company, they will want to see the utility of the product. Then there are Superman founders who become bottlenecks to the growth of the company. They can't work with team. They don't trust anybody. मैं और मैं ही हूँ बस सब, right? That kind of attitude kind of takes the company down, right? And people need to understand every founder is a human being at the end of the day, right? No one has unlimited hours of working or energy to solve everything, right? If ask the mothers who are working and also raising a child, right? Takes away a lot of energy. So this is very much like that. It is, you're building a company which requires family support, right? It is like getting into a marriage and having a baby and raising the baby, right? It takes 12 to 16 hours a day, right? You can't do it without the support of your husband or wife in a marriage, right? Similarly, you can't do it without the support of a co-founder who understands technology. So you need to understand that co-founding team is very very important, right? Because as the company grows, you need the right kind of people to balance technical, finance, distribution, right? And this is how the structure will go, right? It's very good. Like, another example is, जो घर में शादी होती है तो काम डिस्ट्रीब्यूट हो जाते हैं, right? भाई ये काम कर रहा है लॉजिस्टिक्स का, चाचा ये काम कर रहे हैं हलवाई का, right? So it's that mindset, right? And we tend to forget because we're Indians, right? But एक बार company start करे, we forget this base. It's the same thing as using the family values in your company values, right? There's nothing fancy, there's nothing complicated about it. So this is another reason why founders don't get funded. Raising money from wrong investors with no reputation. I think today founders have become a little more smart. They're choosing the right investors. There are investors who are very very transparent in terms of having information on their website in terms of the amount they're investing and how to approach companies. But there are investors who there are founders who raise money from wrong investors. Let's say like a real estate agent, right, who doesn't understand the startup. He's a good real estate agent, he's a good real estate builder, as an example. But if they don't, and I'm not saying real estate builders don't understand startups, but let's say assuming some of them don't, right? And then they expect that acha humne dala ab return kab aayega, right? So those kind of investors can be dangerous for this company, because the early stage companies go through a lot of iterative process. आज कुछ कर रहे हैं, कल कुछ और हो सकता है, परसों कुछ और हो सकता है, थोड़ा ग्रोथ नीचे हो सकता है, थोड़ा ग्रोथ ऊपर हो सकता है. So you need the right investors who understand this journey, who understand this fluctuation, right? And hence raising money from the right investors become very very critical. Founders are looking to generate income and not wealth. I think we must have not invested in at least 50 companies, maybe शायद वो अच्छी companies बन भी गई हो, but we decided not to invest in those companies because founders either were not full time, or they said no, I want to raise money because if I'm raising 1.25 crore तो 25 लाख तो मैं सैलरी में लेके जाऊंगा, And that kind of mindset is wrong, because you anyways hold equity in that company, right? अगर आपने इक्विटी होल्ड करा हुआ है और आपको पैसे मिला, आपका योर ड्यूटी इज टू ensure the value of that equity increases, right? The money should initially be utilized for the company. The objective is founders anyways own large share of equity. Your important fact should be you need to focus on wealth creation. Wealth creation will happen when your company is more productive. कंपनी यूज हो रहा है, प्रोडक्ट बन रहा है, प्रोडक्ट यूज कर रहे हैं, कस्टमर्स आ रहे हैं, आपका इक्विटी का वैल्यू 1 रुपए से 100 रुपए होगा, 100 से 1000 रुपए होगा, एंड दैट काइंड ऑफ माइंडसेट is very important, which we see sometimes that founders only start companies because salary milega, they want funding because salary milega, right? And that mindset is wrong. So the other reason why founders don't get funded is because they approach investors saying, मैं ये भी करूंगा, मैं ये भी करूंगा, मैं ये भी करूंगा, मैं ये भी करूंगा, right? Too many revenue models, multiple directions, and सभी हमारे customer हैं, सब बन जाएंगे, is the wrong mindset. You know, seed stage startups पे you have to have a primary focus where you are able to understand that you're a bpooks, you are focused in terms of getting one set of customer, one set of vertical. When Amazon started with only selling books. Basic 30 years down the line they're doing everything, but today if you try and be an Amazon, it doesn't make sense, right? So whenever you start, you have to be a category leader in that one segment, right? That is very, very important. Otherwise, you'll end up becoming bespoke services business, which nobody will fund. Uh, Again, this is alluding to the last point which I made, is like you spend a lot of money on technology, buying a lot of things. Don't do all of that, right? Pehle, first couple of at least दो funding round आपके product market fit, PMF, कि product चलेगा नहीं चलेगा, is to be worked towards that, and any and everything which can help you reach that is should be your primary responsibility. Now there are cost and there are pricing issues, weak business model. These are another set of reasons why you don't get funded, right? Because it's a me too problem. पहले भी लोगों ने करा हुआ है, कुछ खास डिफरेंस नहीं है, right? And always remember, venture capitalist पैसा उस जगह जा रहेगा जहाँ पे innovation है, जहाँ पे disruption है, right? And that is a core focus. Again, I've already touched upon this. There's no moat or IP, right? Startups whose product and business services can easily be replicated find themselves among a lot of competition. They get out competed and by other entrants in the market, right? Some startups do not have any unfair advantage, right? They are either a copycat of big existing businesses with no unique value proposition, no direction to become a leader, right? These startups fail because they can't fight competition, right? So another reason why founders don't get funded is they're not careful with their equity allocation, right? So they've already diluted to some advisor 10-15%, right? And before they go to an investor, investors say you've already diluted, so we will not invest in you, right? And so compensation by equity is the costliest way of financing your business, right? Be very, very careful of how much equity you're allocating, right? So it's very, very important. Now, to sum up what I've just said, I'm coming to the end, is why certain startups don't get funded. So companies that can't grow fast and absorb capital at a high speed do not fit into the investment thesis of a venture capital fund. Asset heavy businesses don't attract VC funding. VCs like to invest in asset light business models which bring in technology, innovation, and team execution. Lack of focus, too many moving parts, and absent complementary skill sets also don't give founders the investment. Basic unit economics, no clarity on metrics, financial metrics का कुछ अंदाजा ही नहीं है, is another reason why you won't get funded. And capital structure, if too much dilution happens, you won't get funded, right? So like anything else, have your elevator pitch. I come back to this first point, that founders don't number one reason for founders not to get funded is they are unable to communicate the idea, right? So like anything else, practice, remember how you say it is as important as what you say, right? So these are some of the points which you need to have in your pitch deck: team slide, problem statement, USP, impact, market opportunity, competitive analysis, journey so far, traction, product roadmap, business roadmap. These needs to be there. You should know what your metrics are, key metrics, right? Whether it's monthly recurring revenue, annual recurring revenue, CAC, आपके बिजनेस में क्या मेट्रिक एप्लीकेबल है is very important for you to know, right? And which will determine or show growth, and which you can explain to an investor. Again, हर एक metric is not applicable to every type of business, so know which metric is applicable to you, right? So with that, always remember, you might have built a great product, but you need to convert that product to a business when you're pitching to an investor, right? That is the most important thing. Because every time you're talking of unmet need, market side, solution, team execution, financial projections, terms of investment, हम आपको यहाँ पे exit दे देंगे. VCs are only listening to this. Is there money to be made? Are these the people who can make me money? And how much money can I make? Right? So, with that, I come to an end. 100x, as I said, we are an early stage fund. We've made 105 investments across sectors: deep technology, agri tech, SaaS, fintech, D2C, consumer brands. Some of our companies include multiple brands. We invest in founding teams, market size opportunities, business model strength. If there's a great business model, unfair advantage or moat, and our ability to have minimum 20x returns, right? As I said, we are investing 1.25 crores as a standard check per company for our companies. If you guys are building and you've built something beyond an idea, feel free to upload your deck via www.100x.vc/class09, and we'll be happy to set up call and understand. We've already invested in a few set of companies already in class 09, and we'll be closing class 09 by February end. So feel free to kind of reach out to us and apply. And we make all our investments through iSAFE agreement, which is India's simple agreement for future equity. Uh, Very, very standard terms. You should look up how this happens, but this essentially helps you close a transaction very soon. And some of our portfolio companies, we've invested in Smiles.ai, which raised 23 million in Series A this March, last March. We invested in Kerala banana chips. I'm sure you must have tried those chips as well. And they recently got showcased in Shark Tank also, which was last year. We've invested in Data Sutram, Vitra.ai, Bugs Base, and so many others, right? 105 companies. These companies are growing very fast. These companies have gone ahead and raised capital from other VCs. And when we invest in them, we work very closely with them to ensure that they are able to move to the next level. And we are able to kind of take them to a Series B, Series A, and Series B level. These are some of the investors who invested in our portfolio companies: Chirate, Titan Capital, Prime Ventures, Lightspeed, Point One, Sequoia, Alpha Wave, so on and so forth. Also, as a non-for-profit initiative, what we do is we also run a Gurukul program, which is for no equity, no cost, where we provide free content to companies who don't know what they're building, what to do, right? And these include 12 weeks of online course, live plus recorded video content, and not for profit, right? And this is what we kind of provide, and we've already inducted 800 plus startups who've gone through this program. This is not funding, this is purely knowledge, and maybe sharpen their skill sets a little bit, right? And yeah, we've been covered in Forbes and bunch of other places. So feel free to log on to Forbes India and you read our articles 0 to 1 and beyond, where we talk about how we provide a combination of smart capital, which is not only capital and education, plus it is most importantly network, right? How you can build and grow. So yeah, feel free to apply to 100x.vc slash class 09. I'm very accessible on social media, linkedin.com. So feel free to reach out to me over there, follow me. Also very, very active on Instagram. So my Instagram handle is Shashank Randev underscore 100x.vc. Sorry, 100x, not vc. But feel free to add me and follow me. And yeah, with that, I come to an end. And Lalita, I'm happy to take up questions.
Thank you so much, sir, for sharing your knowledge and experience with us. We have few questions from our viewers, so I would like to take up some. So there is a question from one viewer: is there any maximum or minimum investment investors do?
Depends on the type of investor. If it's an angel investor, they'll have a different ticket size. If it's a micro VC fund, they'll have a different size. Like our standard check size is 1.25 crores. There are funds which do upwards of 5 crores, 7 crores, 10 crores also, and then there are funds which invest 50 crores per company as well. So really depends stage and type of investor.
Second question is from a viewer who want to ask how many team member required for a funding round.
So it's not the right way to look at it. It's not the number of people you require, is the number of people you think you need to build a team with. For instance, if you're building a deep technology company and you're not a technology person, your co-founder slash CTO should be a person who can build the technology, right?
Correct.
So 2 to 3 people is an ideal number, as long as you have specific roles which you can't do or he can't do, you know, and that is why it becomes complementary, as they say.
Okay. Another question is, do investors invest in offline business?
So we've invested in bunch of offline businesses, right?
Yeah.
So Kerala banana chips you can only eat when you are offline, right? You can't eat it online. So
Correct.
so yeah, but they sell via online channels, right? So if it's offline, it still needs to be asset light, right? So it really depends on what we've invested in a pharmaceutical nutraceutical brand also, um, which is making products. We've invested in a pets shampoo brand also, which is making physical products. Like they're selling online, and that's a distribution mechanism which we like in a model.
There is a last question I would like to ask from a viewer's side. At what stage 100x VC invests?
So as I mentioned already twice in the presentation that if you are not an idea, we will invest. So don't come to us at an idea. If you build something, something tangible, we are happy to look at it.
Okay. Sir, I would also like to ask some questions. Like before going in front of the investor first time, what kind of preparations do startup have to, required to do it so they be confident in front of investors?
I think they should be very thorough about what they're building, right? And I think that which market they're going after. I think that is the most important thing. And as I mentioned, the presentation, in the presentation,
Yeah.
you need to have these pointers covered in your presentation, right? Which is, as I mentioned, right, your the product roadmap, team slide, problem statement, right? You need to understand how big the opportunity is, right? And if you have these things in place, in depth understanding of market opportunity, competition analysis, I think that's you should go prepared in this format.
Correct. So one more question I would like to ask, like, what type of questions should startups ask from investor?
Yeah, I mean, post the pitch, I think founders have the right to ask, how did you find the pitch? Any feedback on the pitch or any feedback on our business? Is this something which is of interest to you, or anything which we can improve? These are the set of questions you can ask the investors.
So I hope all the viewers got their answers from sir's side. And to conclude the session, I would like to ask Sashank sir to just give a quick tip to our early stage startups, like what they can do for their startups, or what is a tip from his side to our startups.
Sure. No, I think it's a great time in 2023 to be building businesses. Uh, I studied from a tier two engineering college from in Nagpur, right? So I've stayed in tier two way back in 1999 up till 2003, right? And there we used to pay 100 rupees for an hour for internet access. Things have really changed now, right?
Yes.
You all of the people are on the same level playing field, tier one ho or tier three ho, right? And with internet penetration, geo smartphone access, uh, and great colleges in tier 2 cities, the talent available is cheaper, right? You can build great businesses. India has many problems, right? And with the advent of UPI and delivery mechanism. There's so much happening in tier 2, tier 3 cities, right? And great businesses can be built out from these cities for the different parts of India as well, right? So my input is that today is a great time to be interacting with folks. Like Jabalpur Incubation Center has organized this session. 20 years ago, we never had this opportunity to interact with any investors, right? Not even in tier one, Bombay or Delhi, right? So times are changing. You guys are sitting on a great opportunity, and execution is the key, right? So agle 10-12 saal is for India, right? So if you pull up your sleeves and start really educating yourself, understanding and where we are, in terms of our vantage point, it's a great time to be building businesses. So my humble suggestion, request to all the founders would be, go ahead, try, fail, and then come back. Because अब तो कल्चर भी चेंज हो गया कि हमारा बेटा स्टार्टअप कर रहा है, अच्छी बात है। 20 साल पहले हमारा बेटा स्टार्टअप कर रहा है, पीपल वुड हैव डिसोन्ड यू, राइट? सो
Yeah.
that mindset is also changing now, right? So try, fail fast, and move ahead and try something new.
So thank you so much, sir, for coming and giving up your time. It is such a pleasure to have you with us. And I hope हमारे जितने भी viewers हैं उनको काफ़ी सारा motivation, experience और knowledge मिला होगा इस session के द्वारा. So thank you so much once again from all the behalf of Incubation Center. Thank you so much, sir, and thank you, Megha, for hosting the session.
Thank
Thank
you
you
so
so
much,
much,
Lalita.
everyone.
Thank
Thank you
you.
so much,
Thank you for
sir.
having me, and all the very best to everyone. Take care.
Thank you so much.
Bye.